Welcome back. The presidency of Donald Trump breaks with tradition in many ways, and that's something, of course, historians will likely be analyzing for years and decades to come. One of those ways is his habit of launching attacks and personal insults towards the man who has headed up the U.S. Federal Reserve Board for the past 7 years, Jerome Powell. Our next guest is perfectly suited to talk about it. He's an economist who studies the Fed and co-authored the 2017 book, The Myth of Independence: How Congress Governs the Federal Reserve. Mark Spindel joins us now. He's chief macro strategist at FM Investments. Mark, thanks a lot for joining us. We'll get to the relationship of Congress and the Fed in just a moment, It is utterly unprecedented to hear the things that the current U.S. president is saying about the Federal Reserve Board, and in particular the head of the Federal Reserve Board. Is that fair?
Good morning, Paul, and thanks again for having me. I think one caution is presidential pressure on the heads of the central banks, on the Federal Reserve, is not actually new. I think what President Trump is doing, both in his first term and more aggressively in his second season, is threatening to cashier or fire Jay Powell. And I think that's where he's taken these threats to a new level. Past presidents, particularly Richard Nixon, LBJ, put a lot of pressure on their Fed chairs, William McChesney Martin, and famously Alfred Burns, and they succumbed to that pressure. And I think the question that markets are wrestling with and analysts are wrestling with is, to what extent will Jay Powell and this Fed succumb to some of this very aggressive Trumpian attacks?
Did any of those prior presidents use language like total loser to describe the sitting chair of the U.S. Fed? And do you consider that important, or is that just a style differential between Trump and his predecessors?
You know, I think President Trump does have his own unique style, and the aggressive rhetoric is worth mentioning. LBJ invited McChesney Martin down to his ranch, famously in Texas, put his hands on the Fed chair and sort of threatened him for raising rates while, quote, his boys were dying in Vietnam. Nixon put so much pressure on Burns that he succumbed to it. Burns wrote about it in his diary much later. So I think Trump's pressure is unique. Again, the threat to fire him is unprecedented. I just want to draw caution to your viewers and to market analysts. Presidential pressure is nothing new. Firing the chair of the Fed Reserve would be quite spectacular and I've said catastrophic to financial markets, and all of which Trump also talks about trying to achieve. Interest rates would go up, equity markets would tank. I think the market would demand an even higher risk premium on U.S. Treasury bonds. The U.S. government is issuing a lot of debt. The proposed budget seems to forecast even more issuance. So firing Jay and really compromising that interdependence, the myth of independence that I wrote about, would not be served by terminating this particular Fed chair.
Politicians like lower interest rates. Is that an accurate simplification of the dynamic at work here?
They sure do. It makes their life easier. It gives us all a sort of fast track to dessert without ever eating our vegetables.
Okay. Let's go to your book. Now, your book was written in 2017, so that was some time ago. It was before Jerome Powell, for instance, was named to his position as chair of the Fed. He was named to that position in 2018. We're looking at a cover of the book. Your co-author was Sarah Binder. You're Mark Spindel, of course. The title of the book, The Myth of Independence: How Congress either governs or controls, the image is not there anymore, the Federal Reserve. Talk to us about the thesis of that book. Now, here we're talking about Congress, not the executive branch.
No, I think that's really important, Paul. When Bernanke was passing the baton to Janet Yellen, he was asked if he would give Janet Yellen any advice. And he said, remember, Congress is our boss. And I think that's behind a lot of the Trumpian sort of actions these days, is trying to steal power or assume power from the legislative branch. What we wrote about in that book was the history of the way Congress really does have control of the activating law, the Federal Reserve Act. They've opened and amended that law some 18 times. in the last century. And back to your sort of top of the broadcast question, would Congress step in to defend its agency here in the Federal Reserve? Back to 2018, after we published the book, really influential senators like Shelby, Senator Toomey from Pennsylvania, really spoke up in defense of their oversight of the Fed. We're really not hearing that much these days. And the book went back and just looked at all the different sort of times in history when Congress amended the piece of legislation. If I can give you one good example, when the Fed was stood up in the early part of the 20th century, the Treasury Secretary actually sat on the Board of Governors. Fun fact, he was also the son-in-law of the president, Woodrow Wilson. After the Depression in the mid-30s, Congress revised the act and took the Treasury Secretary off of the board. So I only mean to point that out because there are times in the history where the executive branch, the president and his hand-selected cabinet, had a firmer hand on monetary policy.
How much of a history is there of Fed Reserve chairs pushing back vigorously against these political efforts to control it? Jerome Powell strikes me as a gentleman. I don't think he uses language in public like total loser. He may not even use it in private, but we understand he very strongly objects to the idea that he can be fired by the U.S. president.
He absolutely does. He also claims that there's independence in the legislation. We don't see that verbatim. But I think Jay would push back pretty hard. Fed chairs have tried to resist, as I said. McChesney Martin in the late 60s, Burns in the early 70s. But presidential pressure is hard to resist. I think the myth of independence also speaks to the way that the Federal Reserve likes to imagine it's operating, even though the research that I've done and that Sarah and I published really sort of looks back over 100 years and finds all interdependence. I think the message to listeners and to investors is the Fed is sitting in a very political town here in Washington, and it's a town that has become much more partisan and polarized. And the reliance and the interdependence on legislative and executive pressure is not going to die down. The threats that President levied just earlier this week and then walked back 36 hours later, I would expect 2 or 3 more attempts to sort of threaten or sort of talk about firing Jay before we get to maybe not the May meeting next month, but certainly by June, and I imagine we'll see some signs of economic slowdown.
Jerome Powell's tenure as chair ends sometime in 2026, I'm quite sure. How possible is it that Donald Trump would name a replacement who is essentially a yes person? Trump's cabinet has some very unconventional names in it. Pete Hegseth comes to mind. Tulsi Gabbard comes to mind in very, very senior and important roles in the U.S. government and in the cabinet. How likely is it, or how possible is it perhaps, that Donald Trump would name a new U.S. Fed chair who's essentially a yes person to the White House?
I think the market is going to sort of test that hypothesis that you laid out, because what you're describing is highly possible. Reporting by the Wall Street Journal, in the last couple of weeks, sort of floated some names. Those names are spending a lot of time with the president. I think there has already been some damage done to the sense of independence. That's put upward pressure on the risk premia, the term premia in U.S. bonds. The character of the individual is certainly going to matter, and we're going to study their CV quite closely. Gentlemen like sort of Kevin Warsh, Kevin Hassett, sort of other names that have been floated, the current sitting Treasury Secretary, who sort of came up with the idea of a shadow Fed chair, walked it back a week or so later. But sort of anyone sort of close to the president who begins to comment on monetary policy, I think will get the ear of the bond market. And so we'll have to see whether the person can sort of push back on this kind of Trumpian pressure.
Mark, thank you very much for this conversation, a great conversation. Mark Spindel, Chief Macro Strategist at FM Investments and co-author of the 2017 book, The Myth of Independence: How Congress Governs the Federal Reserve.